Eric Mwadhi at Mwadhi.com with the US market analysis for the weekend of July 10th, 2016. Let's take a look at markets here with about 2 hours to go. Markets are trading at the highs for the day pretty much as far as the NASDAQ, S&P 500 and Dow are concerned. So nice day. Let's take a look at the charts. After a nice recovery off the lows of about a week ago or so, here I believe was last week on Monday, the market has had a strong recovery to now moving above the range here. In fact, the NASDAQ pushing to levels on a weekly basis, challenging the highs on a weekly closing basis for 2016. And that's very exciting for bulls. Now that seems like a bullish development, but we are still leaning towards a market here, in my opinion, that has to move above this range. On the weekly chart, on the RSI, the last time we came and tried to move above this line happened to be the highs right there. And of course, we had a multi-week pullback down here. So the market is going to have to prove it has strength by moving above this line of resistance on the NASDAQ weekly. Otherwise, resistance that is confirmed on this blue line might suggest that we should still expect the market, after a nice couple of days here, that the market eventually does pull back. So we need to clear that very well defined line of resistance on the RSI on the weekly for the NASDAQ. Otherwise, if the market is to see higher prices, it needs to trade above that line of resistance on the weekly RSI. And again, there's another way of looking at this. Figure out where the market made a major high on a weekly basis. So for the NASDAQ, this is the level, and we can see that that corresponded with a break in the RSI, as we've been discussing. This break, let's call it somewhere right there. We've been drawing a line from there, something like that, and you can see here the market failed uniform activity rejection, which gave us the highs there, rejection here for the highs there, rejection here for the highs right there, and then rejection here for the highs here. So we are coming back to test that red line. Week to week resistance on that line might suggest that we should expect the market to pull back after a nice recovery. And don't forget, so you can add the previous line like that, and you can see that this is very strong resistance. We need to move above this, otherwise one can expect some type of a pullback if the market confirms resistance on these two lines. The same analysis can be seen for the Dow. So we'll just draw the lines here, cut quick to the chase. Topside resistance needs to be taken out if the market is to see higher prices, and also coming back to show resistance on the previous break line. So right there, in fact, let me draw a little bit lower. There's resistance somewhere here based on the movement of the highs with this break. So the Dow, like the NASDAQ, needs to clear this resistance, otherwise this is just a trap and that the market is preparing to pull back. Take a look at the Dow hourly chart, and here you can see that we are still coming back to test the top side. This top side line connecting the recent highs on the hourly that could present a problem, as the market is trading higher here, close to 230 points higher on the Dow. But hour to hour, this could be a trouble spot as we come to the conclusion of the week. And also this red line is a problem, because the last time we made a short-term high here, the market stalled on that red line, and we've been every time we hit that red line, there's a pullback in the market. We came close here for the highs there, we touched that level there for the highs there. So again, the hourly charts also showing the potential for resistance here, as the market is trading close to 230 points higher on the Dow. Hour to hour, this is looking like this is where one would expect a pullback. Also, there's another argument, which is that the market is making an improvement in price highs here, but the RSI is showing no improvement. So that negative divergence does set the stage to expect the market to pull back. Again, trading at the highs of the day, we can see here that the Dow transports are coming back to challenge the RSI resistance point. So draw a line connecting RSI highs. You can see we are coming here, and already the market is responding to that level and as long as that resistance is confirmed, one can continue expecting a pullback in markets after a nice move on Friday. Also coming back, and if you draw a line of the recent break on the RSI for the Dow Transport, so this break here brought the market off the highs of late April. So draw a line from here, and you can see that every time we hit that red line and stall, the market makes a short-term high, and here we are potentially doing the same thing. So as long as the market is showing resistance on those two lines, again, here's another chart suggesting that now we can expect the market to pull back after a nice recovery of the lows of about a week and a half ago. Take a look at the S&P 500 right now with about 2 hours to go, doing its best to close above the all-time weekly closing high. So doing its best to break out here on a weekly basis. The level to watch here is S&P 500 needs to clear and stay above 2126.64. A breakout above that level would be bullish, so the market needs to hold above that. Otherwise, failure to break out here could be a problem. Having said that, again, take a look at the hourly, and just like we saw for the Dow and the Dow Transports, we can see that it is coming back to test the top side RSI highs line like that, and also coming back and already seeing that it is responding to that resistance level. Also keep in mind that we are also seeing the line of the recent break, so this red line is always going to be a problem. And also we can see that the market made a slight improvement in prices here, but the RSI is not showing any improvement. So again, that negative divergence on the short-term charts does suggest that after a nice move here off the lows, that we can logically expect the market now to be leaning towards a pullback. And now, to be very frank here, I think the key to this market is whether the market can break out on the monthly chart. So for the S&P 500, if it can hold above the all-time monthly closing high, this market could actually take off. And so the level to watch here is, again, we are seeing the S&P 500 do its best to break out on its monthly chart above the all-time monthly closing high going back to this month here. So it needs to stay above that if it is to be bullish. Otherwise, failure to break out again brings the idea that the market, after many attempts to break out, this could be another failed breakout attempt, suggesting if we don't hold above this price range, that the market could start pointing down again. But anything above this price range could actually bring in a very fast moving market to the upside. That's the SPX for the Dow, the level to watch. Here, as we see the Dow also approaching its recent current all-time monthly closing high here for the Dow, and that's at 18,132.70. Anything above that level is absolutely bullish. Otherwise, failure to break out is not good for the market, because it does discourage buyers and starts a pullback. So market bulls would like the market to clear this level here and push higher. Otherwise, those who want the market to go higher need to insist that the Dow fails to break out. That's it for now. Otherwise, I'll keep you guys posted. Subscribers, be on the lookout for part 2 of this weekend's market analysis video, which should be ready sometime, most likely middle of the day on Sunday. Good luck, peace, and blessings. ESCS.